Welcome to the Two Beans in a Pod. Today, we're going to dive right into this recent U.S.-China trade truce and really what it means for your wallet right here in the U.S.
Exactly. We've got a few different sources we're looking at, some discussion from Fox Business, kind of laying out the bigger picture on trade policy, and also looking at, the potential impact of tariff policies. Then there are a couple of news articles, too, getting into the specifics of this truce.
Yeah, the actual details of the agreement and what it might mean for, well, for us. So our mission today really is to cut through all the jargon and just figure out how this truce might affect the prices you actually pay for everyday stuff.
Right. Let's start with a bit of the backstory, the context, because these tariffs, they didn't just appear out of nowhere.
No, definitely not.
They were initially put in place because there were these concerns, right, about the U.S. being maybe too dependent on foreign products.
Especially from China.
Especially from China, yeah. And one of the Fox Business clips we looked at, I mentioned the idea was, well, the stated aim was to use these tariffs to encourage negotiation.
Like leverage.
Exactly, leverage to get, what the U.S. considered fairer treatment in trade. It was a tool, really, meant to kind of shift the balance.
Okay, so using tariffs to force talks. Makes sense. Now, the big news is this 90-day truce announced recently. What exactly does that involve?
Okay, so the headline is a significant pause. That's the key takeaway. The U.S. and China agreed in Geneva around May 12, 2025, to basically hit pause on their trade disputes for 90 days.
90 days. So, like 3 months?
Yep, roughly 3 months.
Yeah.
And it's not just a minor pause. It involves some pretty substantial changes to the actual tariffs that were active.
Okay, substantial changes. Let's dig into that. What specifically is changing? What tariffs are actually being reduced?
But this is where it gets interesting for potential costs. Yeah. The agreement lays out some pretty big reductions. The U.S. side has agreed to lower its average tariffs on Chinese imports way down.
How far down?
From an average of around 145% down to 30%.
Wow, okay. From 145 to 30, that's huge.
It really is. And at the same time, China's doing something similar. They're cutting duties on American goods from about 125% down to 10%.
10%. So big cuts on both sides then.
Definitely. And these cuts are scheduled to start pretty much immediately, like May 14th, 2025.
Okay.
And they're set to last until, well, mid-August, aligning with that 90-day window.
So just to be clear, this puts most of the existing tariffs on hold.
That seems to be the case. Our sources suggest this move temporarily halts something like 91% of the active tariffs.
91%.
Yeah. And on top of that, any additional tariffs that were maybe being planned, those are also shelved for now, for these 90 days.
So it's a pretty comprehensive, albeit temporary, rollback.
Exactly. Short term, it's a significant de-escalation.
Okay, this is the crucial bit then. Tariffs are coming down. How does this actually translate to, the stuff we buy? Are we going to see cheaper TVs, cheaper clothes? What does it mean for our actual spending?
Well, that's the million-dollar question, isn't it? And it's where the direct impact on you, the U.S. consumer, should be felt. The expectation, this was mentioned in one of the news articles, is that we should see lower prices.
On what kinds of things?
Mostly on goods imported from China. Think electronics, clothing, kitchenware, maybe tools, things like that.
Why those items in particular? Is it just volume?
It's largely because U.S. retailers source a lot of those specific goods from China. The tariffs that were in place basically added a cost layer for those retailers.
Right, an import tax.
Precisely. And often, you know how it works, those extra costs tend to get passed along down the chain.
To us.
To you, the consumer, yeah. Usually in the form of higher prices on the shelf.
So the logic is, tariffs go down, the retailer's costs go down.
And hopefully, eventually, the price tags for us go down too.
Okay, eventually is the key word there, I guess. How soon could we realistically see these price drops? Is it worth holding off on buying a new washing machine or something?
Well, it probably won't be like flipping a switch overnight. That's unlikely. Retailers, supply chains, they need time to adjust. Pricing strategies need to be updated. Inventory bought at higher costs might need to clear out first.
Right, logistics.
Exactly. But the expectation is that these lower costs will start to filter through. We could potentially start seeing some noticeable price relief, maybe by the summer.
By summer, okay.
Especially, I'd think, on items where prices clearly jumped up because of the tariffs over the past couple of years. Those might be the first to adjust back down.
That sounds promising, at least in the short term. What about the businesses themselves here in the U.S., beyond just retailers passing savings on? How does this truce affect, say, manufacturers or tech companies?
Yeah, that's another important angle. For businesses that rely heavily on cross-border supply chains involving China.
Like tech companies needing components.
Exactly. Tech, construction, consumer goods manufacturers, lots of sectors.
Hmm.
If they rely on parts or even finished products from China, this truce offers them, well, a significant breather.
Less cost pressure.
Less cost pressure, potentially fewer logistical headaches. Their operating costs are likely to decrease during this 90-day period.
And how does that loop back to benefit us, the consumers? Indirectly, I suppose.
Well, lower operating costs for businesses can mean a couple of things for us. One, they might be more able or willing to lower their prices beyond just the direct tariff impact. Two, it could lead to a more stable supply of certain goods.
Yeah.
Less disruption than we might have seen when tariffs were really high or uncertain.
Ah, okay. So maybe fewer out-of-stock notices or slightly better prices overall if businesses feel more stable.
Potentially, yes. It eases some friction in the system.
Now, you mentioned it halts 91% of tariffs, so not everything. Are there still some tariffs sticking around despite the truce?
That's a really important point to clarify, yes. It's not a complete removal of all tariffs. The sources specifically mentioned that tariffs of up to 120%.
Wow, 120% still.
Yes, up to that much will remain on what's called de minimis shipments.
De minimis, what's that?
It basically refers to low-value e-commerce packages. The small things people often buy directly online from overseas sellers, like on platforms such as AliExpress or Temu.
Ah, okay. So the stuff you buy directly from China online, often quite cheap items.
Exactly. Those small individual packages. Below a certain value threshold, they won't necessarily see the same tariff relief under this truce.
That's good to know for anyone doing a lot of that kind of online shopping. Those prices might not change much.
Correct. That category seems to be largely excluded from this particular agreement.
Too, yeah. Now, switching gears slightly. The financial markets seemed to like this news, didn't they? Stocks went up.
They did. The reports mentioned gains in the Dow, the S&P 500, the NASDAQ. Pretty broad positive reaction.
What does that tell us? Why does Wall Street care about these tariffs?
Well, investors generally see high tariffs and trade wars as sources of economic uncertainty and potentially damaging to corporate profits and overall growth.
Creates instability.
Right. So this truce, even though it's temporary, is likely seen as reducing some of that immediate instability and economic pressure.
So the market rally is basically a sigh of relief, a bet that things might get a bit smoother for the economy.
Right, I can put it that way, yeah. It suggests optimism that easing trade tensions could be good for business, good for the economy, which, eventually could trickle down positively for consumers, too.
A stable economy is generally good for everyone's finances in the long run.
Generally, yes. But, and this is the big but.
It's only 90 days.
It's only 90 days. This is a temporary agreement. It is not a permanent resolution to the underlying trade issues between the U.S. and China.
Right. The reasons these tariffs were imposed in the first place, things like disputes over technology transfer, intellectual property, the overall trade imbalance, those haven't just vanished, have they?
Not at all. Those fundamental, complex issues are still very much on the table. They weren't resolved in Geneva. This truce just pauses the tariff fight while they potentially continue negotiating those tougher points.
So what happens after mid-August?
That's the uncertainty. There's a real possibility that if no longer-term deal is reached on those core issues, the tariffs could snap back.
Or even new ones could be introduced.
Or new tensions could emerge, yes. So any price relief we see now could be temporary. We might see prices start to fluctuate again later this year if things don't progress.
So enjoy any potential savings while they last, but don't necessarily bank on them long-term.
That seems like a reasonable perspective, yeah.
Yeah.
Cautious optimism for the next few months, perhaps?
Okay, this is a lot to digest. If you're finding this deep dive helpful, if it's making sense of how this US-China trade truce might actually impact your budget, please do take a second to hit that like button. And if you want more breakdowns like this, simplifying complex topics, definitely subscribe to the channel.
Yeah, it really is fascinating, isn't it, how these high-level international trade policies can directly ripple down to affect the price you pay for a toaster or a pair of shoes.
Absolutely. It shows how connected everything is, the global economy and our own personal finances. So let's try and sum this up for everyone listening. What does this all mean for you?
Well, in the short term, the next 3 months or so, you might start seeing some slightly lower prices on certain goods, especially electronics, clothes, kitchen stuff imported from China.
Might is the operative word, and it'll likely take a little time.
Right. But it's crucial, really crucial, to remember this is temporary. The bigger picture, the long-term impact, that all depends on whether the U.S. and China can actually hammer out a more lasting agreement on those fundamental issues we mentioned. Yeah, the standout point here is the immediate potential for some consumer relief. That's the upside. But it's definitely tempered by the big question mark hanging over the future of the trade relationship.
So keep an eye on prices over the summer. That's probably the best advice. See if you notice any changes on the things you usually buy. That'll be the real indicator of how this truce is playing out on the ground.
And it raises an interesting question to think about, doesn't it? How might businesses actually use this 90-day window? Strategically, I mean. Will they pass savings on quickly to gain market share? Will they rebuild inventory? Will they maybe accelerate plans to diversify their supply chains away from China using this pause as cover?
So how their reactions during this temporary truce might actually create lasting effects, even if the tariffs come back later.
Exactly. What lasting adjustments might happen in these 3 months, regardless of the final outcome? Something to mull over.
Definitely food for thought. Thank you for listening to Two Beans in a Pod.